Hello friends, I am C. AKSHAY.AKAC
Hello friends, I am CA Samaksh Gupta.
and we are here to make our first video on Ind AS, that is on applicability of Ind AS on financial statements. And we believe that this particular video is relevant for more than 90% of our professional friends because it's hardly 10% of the cases where Ind AS are actually applicable. So for those 90% of our friends, this video will help them to make sure that Ind AS are not applicable on their clients. So let's start with the video. So the very first question comes in our mind is the regulatory framework of India, which actually prescribes or requires the Ind AS to be used. So Samaksh, can you please throw some light on the regulatory framework in this regard?
Definitely. See, our Indian regulatory framework is broadly categorized into two categories. The first one is the companies which are registered under Companies Act 2030.
Okay.
And the other one is other entities which are not registered under Companies
Can you give us some examples for that?
Yeah, it includes partnership firms, NGOs, trusts, proprietorship firms, etc. and so on.
Okay. So what's been the use of these two categories for the applicability of Ind AS?
See, the Ind AS are not applicable at all on the second category. That is, Ind AS is not applicable on partnership firms, trust, NGOs, proprietorship firm, which are most of our clients.
Irrespective of the fact
Yes.
that how much turnover or how big giants they are still
Yes.
exempt from the Ind AS?
Yes, they are still exempt from Ind AS.
Impressive. So that will help most of our friends. Okay. And what about the first category? Is it applicable on the entire category?
Yeah, it is applicable on the entire category, but not in a standard manner. The companies are further categorized into four categories. These are categorized based on their regulatory framework.
Okay.
Okay. The first category is insurance companies, which are regulated by IRDAI.
Right.
The second category is banking companies,
Okay.
which are governed by RBI.
Right.
The third category is NBFCs, which are also governed by RBI.
Okay.
And the fourth category is other companies other than insurance, banking, and NBFCs.
Okay. So every company which are not covering under the three categories are in the four categories.
Yes, right.
Okay. So can we start the applicability in the first category, that is insurance company? Can you give us something about that?
Yeah, absolutely, Akshay. See, the Ind AS was supposed to be applied on insurance companies from 1st April 2020. That is from this financial year onwards.
Okay.
Right. But this applicability of Ind AS has been deferred by the IRDAI till their further notice. The first reason of deferment of these applicability of these Ind AS on insurance company is COVID-19 outbreak. And the second reason is, as we all know, Ind AS are derived from IFRS.
Right. Those are the actually Indian modified version of IFRS.
Right. So IFRS 17 is the IFRS which governed the accounting principles of insurance companies.
Okay.
This IFRS based Ind AS is not yet been implemented in India by the Indian Accounting Standard Board.
Okay.
So that is the reason why these Ind AS are not applicable right now on the insurance companies.
So is there any expected date of applicability for the insurance companies?
Right now, we can't say anything about the expected date, but yes, the IRDAI has issued a notification saying that the Ind AS are deferred till their further notice. So we have to wait for their notice.
And as far as I could recall, I think the IFRS 17 itself, which is the base for Ind AS, it has not yet been notified, and the draft I read, it showed that the proposed date will be 2022. So I believe, according to that, it's minimum 2 to 3 years from here.
Absolutely.
To get it implemented. Okay. So in conclusion, we can say that Ind AS are not at all applicable on insurance company as of today, right?
Yes, perfect.
Okay.
So Akshay, we talked about insurance companies, but can you please tell us what is the applicability of Ind AS on banking companies, which is the hottest topic during this COVID-19?
Right, our corona warriors, of course.
Yes.
Okay, so coming to the banking company, like insurance company, it was again supposed to be implemented much before today, and it was supposed to be implemented somewhere from 1st April 2019, that is for the financial year ending just a month ago, 31st March 2020. But the applicability of Ind AS on banks has been deferred by Reserve Bank of India, while the notification dated 22nd of March 2019, whereby the applicability has been deferred till any further notice, which has not been notified yet, that further notice. So, in conclusion, like insurance, Ind AS are not yet applicable in the banks itself.
Okay.
Now, there is one important point to be noted here is that regional rural banks, RRBs, what we usually call, RRBs are out of the ambit of Ind AS. So, irrespective of the date of application of Ind AS on the banks, regional rural banks are not supposed to implement Ind AS in the system. So, that is one relief to the regional rural banks, the small banks. Now, the third category indeed, there's non-banking finance companies, or as we call NBFCs. It's being regulated by RBI again. So the Ind AS has been made applicable on NBFCs in a two-phase manner. The first phase begins on 1st April 2018. That is financial year starting on 1st April 2018, along with the comparatives of financial year ending 31st March 2018. So in the first phase, all NBFCs having turnover more than or equal to, I'm repeating, having turnover more than or equal to 500 crores are supposed to mandatorily apply Ind AS in their financial statements. Now, this particular requirement of net worth exceeding or equal to 500 crores is irrespective of the fact of the turnover size of the NBFC, irrespective of the fact profitability of the NBFCs, irrespective of the fact listed or unlisted status of the NBFCs. So, in nutshell, on or after 1st April 2018, every NBFC is having a net worth of more than 500 crores is supposed to implement Ind AS. Second phase of implementation of Ind AS for NBFCs began for the financial year beginning with 1st April 2019, whereby all listed NBFCs having net worth of any amount. I'm repeating, all listed entities having net worth of any amount are required to mandatorily adopt Ind AS with effect from 1st April 2019. Apart from this, all unlisted NBFCs with a net worth of more than or equal to 250 crores are again required to apply Ind AS mandatorily. So, as of today, every NBFCs, if it is listed, it has to apply Ind AS, or any unlisted NBFC having net worth of more than 250 crores is required to apply Ind AS. So only these two categories are required to apply Ind AS as of today. The implementation phase or transition phase has been over for NBFC. There is another important point which needs mention in our discussion is that NBFCs do not have an option to voluntarily adopt any Ind AS.
Okay.
It has to be adopted if it is required by the before mentioned applicable framework of Ind AS applicability. Otherwise, NBFCs can't do. And one more important discussion which needs time here is that if any one company among the entire group of holding company, subsidiary company, associate company, joint ventures company requires the applicability of Ind AS, then the entire group has to apply Ind AS. And this particular requirement is not limited to NBFCs, but applicable to the entire broad horizon of the companies, including NBFCs, including banks, including other companies, so on and so forth.
Okay, that's an interesting thing.
Yeah, but Samaksh, can you think of any reason why the government has taken a decision to make it mandatory for every entity in the group if only one company requires that?
Yeah, this might be done due to the reason of consolidation ease.
Perfectly. And it's quite obvious from here because consolidation do not require the preparation of books of accounts again. It just require to consolidate, to accumulate the books of accounts of different entities. And if one entity is preparing books of accounts on different accounting framework, if different accounting gap, and another entity is on different gap, the consolidation would definitely will not give true and fair view. And that's why if Ind AS is made applicable, it has been made compulsory applicable to the entire group of the companies. So here my discussion regarding NBFC and banks ends, and I hope now Samaksh will let us know about the applicability on other companies, that is all companies other than these three industries. So Samaksh, please.
Definitely, Akshay. So in case of other companies, Ind AS are made applicable in a phased manner, right?
Okay.
So the first phase is the voluntary adoption of Ind AS. From 1st April 2015 onwards, any company excluding NBFCs, banks and insurance companies can apply Ind AS on voluntary basis. But the exception for banks, insurance companies and NBFCs are made just due to the reason that their regulator need to specify a separate format for their financial statements and disclosure requirements. So the second phase starts from 1st April 2016. From 1st April 2016, every company, whether listed or unlisted, mark this, whether listed or unlisted, having net worth more than or equal to 500 CR are liable to adopt Ind AS mandatorily. Okay. The third phase comes from 1st April 2017. From 1st April 2017, every listed company, irrespective of their net worth, are liable to adopt Ind AS. And every unlisted company which has net worth more than or equal to 250 CR are liable to adopt Ind AS. So the conclusion is the companies which are unlisted and having net worth less than 250 CR are not liable to implement Ind AS.
So much, I have a very obvious question that nowadays there are many companies which are listed, but yet the net worth is not at that level. So is there any sort of exemption for such listed companies?
Yeah, there is an exemption for listed companies. Those companies which are listed under SME exchange, that is small medium enterprise exchange, are not liable to implement Ind AS.
Okay, irrespective of their net worth?
No, if their net worth is below 500 CR but exceeding 250 CR.
Only those are exempt?
Only those are exempt.
Okay, and any SME exchange listed entity having net worth of below 250 crores?
They are also exempt.
They are also exempt.
Yes.
Okay, right. So, I hope with this our discussion to the applicability comes to an end, or do we need to discuss some?
Akshay, I think we are missing one thing. We talked about the applicability based on net worth. Right. So please tell me what is the meaning of net worth here and why we are taking net worth as the basis of implementation, not the turnover or the capital.
Okay. So the very first thing is that it's hardly mentioned anywhere why net worth has been taken as the basis, because it's been the regulatory body which makes a decision what should be the parameters of applicability. But in a professional capacity and what we as a professional thinks, my viewpoint is that turnover is something which varies from time to time, and it does not give a correct picture of the size of the entity. Only turnover. Same with the profitability, because it is again based on several variables which keeps on changing from time to time. And net worth is like one number which can conclude the size of the entity in just a single number, because it is a result of the capital as well as your accumulated profit over a period of time. And IFRS being of course a very IFRS implementation involves a huge cost and huge manpower and a lot of efforts in various domains. The regulator must have thought that the Ind AS should be made mandatory only to the companies which can actually take this burden, take the financial burdens of this implementation. So that might be the probable reason. There is no documented reason for that, of course. Now coming to the calculation or the computation of the net worth, a very interesting fact is that the nomenclature net worth is nowhere defined in the Ind AS framework. So in absence of any legal definition and from the combined reading of various sources, the net worth simply means the sum total of equity share capital as increased by accumulated amount of profit and reserves and adjusted by accumulated losses, if any. This is a simple definition of net worth which all the professionals are using from so many years, and the same will be adhered here also. So I think this brings our discussion on the applicability of Ind AS to an end, and we hope that more than 90% of our CA friends will be helped by this. They will be ensured that whether Ind AS are applicable on their clients or not, and for the rest of the 10% of the CA brothers and sisters, we will be bringing much more videos.
So till then, keep learning, stay home, stay safe.